Hi guys, we'll be starting the session in just 2 minutes. Thank you for your patience. Hello everyone and welcome to our highly anticipated webinar on Diwali Muhurat picks. We know you have been eagerly waiting for this moment and we are excited to share our insights with you. So without further ado, let me introduce you to the mind behind this carefully curated picks, our esteemed head of research, fundamental and quant, Neeraj Chadawar. Neeraj possesses a wealth of knowledge and experience in uncovering hidden gems, and he is here to share the top investment opportunities for this Diwali. So, without further delay, let's dive in. Over to you, Neeraj.
Yeah, thank you, and thank you to all the participants for joining our special webinar on Diwali Muhurat picks for Samvat 2081. First of all, let me wish you happy and prosperous Diwali in advance. May this Diwali brings you a good successful investment journey for the Samvat 2081. So today we had released our much anticipated report for Diwali Muhurat picks for Samvat 2081 with a title Diamonds in the Dust. So I will structure my webinar in two parts. First, I will take you through the rear view mirror, what has happened in the last Samvat, what one could expect in the upcoming Samvat, that is 2081, what are the themes one should look at, and what are the investment opportunities available in the Samvat 2081. So without wasting time, let's get begin. So let's have a look on the market in a rear view mirror about the Samvat 2080. The last Samvat was a remarkable Samvat for the Indian equity market, not only India but across the world, marked by continuous achievement in the milestone in terms of Nifty 50. With every incremental quarter, Nifty touched the all-time high level. And on 26th of September, Nifty touched an all-time high level of 26,216. With this achievement, Indian market cap was crossed on that particular day 5 trillion historic mark, making the India the fourth largest market in the world. With this achievement, this is one of the best success Indian equity market has achieved in the history, in the recent history. Since last Diwali, we have seen a broad-based rally in which Nifty 50 has surged by almost 25%, and the broader market indices like mid cap and small cap went up by almost double digit, that is 37% and 36% respectively. In the beginning, we have seen that there is a good amount of enthusiasm in the Indian equity market marked by multiple events. That is the success in the 3 state election out of 4, in which the market narrative built up on the policy continuity and the continuation of the union government in Lok Sabha election. On top of that, the RBI decision to maintain status quo and upgradation of the FY24 GDP also boosted the sentiment in the first part of Samvat. With that, the third event, that is the Federal Reserve meeting in the status quo, a dovish stance during the month of November-December 2023. All in all, brings confidence in the Indian equity market, and we have seen the stellar rally in the first half of Samvat 2080. Moving forward in the second half, this rally continued in the second half, and with incremental sequential improvement in the high frequency indicator, continuous improvement in the quarterly earning, and robust economic growth among all other emerging market countries set the tone for Indian equity market, and we have seen the same rally continued in the second half of the Samvat. However, During the time of election result, we had seen some amount of volatility because the verdict was not as per the expectation of the market. But later on, once the market got the clarity towards the formation of NDA 3.0 government, with this development, the market gained further strength, and based on that, we have seen the all-time high level of 26,216 on the Nifty front on 26th of September. On top of that, we have a full year budget during the month of July. In that full year budget, our finance minister also set the outline for Viksit Bharat. All in all, the stage is set for next decade. This is a decade-long economic growth which we will likely to see in upcoming year. And as per the IMF estimate, India likely to cross 5 trillion economy by FY27. So there are enough green shoots in Indian economy, and we need to see there are multiple triggers which are currently going in the market, and we will likely to see a good number of economic growth in the upcoming years. So this is about the rear view mirror, what has happened in the last Samvat. Now, what is likely to be in the next Samvat, that is Samvat 2081. Now the path of next Samvat is completely different from the last Samvat. Why we are saying? Because now we are entering into a rate cut cycle, which has already started with US Federal Reserve cut the interest rate by 50 bips during September 24 FOMC meeting. And they also signaled 2 more rate cuts in the remaining part of 2024. Followed by this, we have seen in the recent MPC from the RBI. RBI also changed the stance from withdrawal on accommodation to neutral. This indicates that RBI is preparing the market for first rate cut anytime soon in next 6 to 9 months based on the inflation and the growth dynamics. For the Samvat 2081, we anticipate 1 to 2 rate cut from the RBI that is likely on the card. On top of that, this year we have seen a good amount of monsoon. A special distribution of monsoon was also very solid. So the monsoon rainfall for June to September went up by 4% above the long-term average, and the reservoir level for this particular year is also higher than the last year. All in all, these two favorable factors indicates that there is a good prospects of Rabi crop, a second crop in the rural economy, which will again build good prospects for the rural demand. So there are green shoots in the rural economy on top of the announcement the government had done in the union budget. So second half of FY25 likely to be better as compared to the first half. On top of that, there are multiple events which are in pipeline which will have a bearing on the market. Excuse me. The first and foremost event is the US election. The second is economic recovery in the China. Third is the activity across the nation for the ongoing festival season. Fourth is the direction of the US bond yield. Next is the oil prices, which is fluctuating due to the Middle East crisis and the fund flow. All these factors are expected to introduce volatility in the domestic equity market, and that's why we are seeing volatility in the domestic equity market from last 2 to 3 weeks. We believe that based on this volatility, market could react in either direction, but in the near term, capital allocation could be shifted tactically towards China based on the development. But in any case, we continue to believe in the long-term growth story for the Indian equity market. We are confident about the Indian economy to grow at a rate of 7.2% in FY25 and the similar growth trajectory in the upcoming years. Economic growth will be the key driver for the earnings growth in the domestic corporate. However, with the current valuation, we have seen a good run up. Current valuation offer limited scope for expansion, and we believe that the market return will be more driven by the earnings. And based on that, bottom up stock picking, a stock ideas with focus on growth at a reasonable price and quality stock would be the key to generate satisfactory return in next 1 year. So that's why in current environment, the stock idea picking is very prominent. So based on that, based on the current market structure, we present 4 themes for the market, and we believe that these themes are having a potential to run through the market volatility in next 1 year. We want to choose companies with higher growth potential, with reasonable valuation, leadership position in their respective sectors, company with proven track record of improving return ratios, and at last, a right combination of the rate cut cycle, that is a rate ease cycle theme, defensive, capex, consumption, and export oriented theme. So based on that, our Diwali Muhurat picks for Samvat 2081 are Gravita, Arvind, Inox Wind, KPIT, HG Infra, AU Small, Lupin, Indian Hotel, and Ono Minda, in which the capex player are Gravita, HG Infra, and Inox Wind. The export-oriented IT play is KPIT. The defensive play of pharma is Lupin. The rate cut cycle play is AU Small Finance Bank, and the Arvind Smart Space as a real estate play. And at last, consumption and the market leadership play is basically Indian Hotel and Uno Minda. Excuse me. So this is about the market. This is about what one could think about the Samvat. What are the themes which likely to benefit in the next 1 year? So let's go one by one in each and every stock and understand why we chosen these stock for Samvat 2081. So these are the 9 ideas which we present for Samvat 2081, which is having an upside potential ranging from 18% to 38%. And these are the themes based on solid track record of companies, leadership position in their respective sectors, companies with a growth potential available at a reasonable valuation. You can invest all these picks with a single click also with our small case basket. So this all the 9 picks you can buy with only one click by buying this small case basket with the name of Axis Diwali Muhurat picks Samvat 2081. And with this, the minimum investment for this basket is below 20,000. So let's make a financial journey during this Diwali with minimum investment below 20,000 with Diwali Muhurat picks small case. What about our performance of last Diwali, that is Samvat 2080 small case? We happy to say that we closed this small case today with a return of 38.5% since last Diwali versus the Nifty 50 return of 28%, outperforming the Nifty 50 index by almost 10%. And we happy to say that we already closed 7 out of 9 call in last 1 year. So this is our last year's performance. Let's talk about the stock one by one. The first stock is Gravita India. It's a small cap stock. This stock is the company which is into global recycling industry, recycling of lead, aluminium, plastic, and rubber. Gravita India is a fastest growing company in the recycling space and having a leadership position in the recyclement of lead. We know that currently the government is pushing towards the electric batteries, and government the adoption of EV is increasing day by day. Batteries required lead as an input, and that they also require recyclement. So the Gravita India is the biggest player in the recyclement industry in India. The company is guiding for 25% volume growth for FY25, and similar volume growth trend is likely to grow in next 3 years. The company generate a good double-digit margins of 12 more than 12%, likely by FY27, and company is generating a solid ROE of more than 30%, and we expect ROE to reach 32% by FY27. It is the fastest growing company in the recycling space. We expect from the PAT growth from FY24 to FY27 is more than 30%. So this is at a rate this company is growing. We believe that company is currently available at a very reasonable valuation. We believe 38% upside with a target price of 33,000 in next 1 year. The next stock is into Arvind Smart Spaces. Excuse me. So this stock is into real estate play. So right now we know that real estate in a listed space is concentrated into 5 cities. That is Delhi, Mumbai, Pune, Bangalore, and Hyderabad. Now the market is growing and the real estate players are going beyond top 5 cities. Arvind Smart Space is a very solid play for the fastest growing real estate market of Gujarat, that is in Ahmedabad. Along with that, they do have presence in Pune and Bangalore market also. It's the fastest growing villa. They are the well-known brand in Gujarat, and whatever the project they get into, they're able to sell all the inventories before the timeline. They are into asset light model. They also incorporate into JVs. We believe that this is a solid story for next 1 year to get invested into this small cap company, Arvind Smart Space, a asset light model in which we are seeing a solid growth in the upcoming years. We believe that the PAT of this company likely to reach by 124 crore by FY26, and we believe that the company the company currently available at a very reasonable valuation with a solid track record of delivering project on time in the history. We believe that this company likely to deliver a solid return of more than 30% with a target price of 1085 in next 1 year. And with this, the rate cut cycle, this company will likely to get benefit as a real estate play where the EMIs will likely to go down with the interest rate cut cycle. So that is the added advantage to add Arvind Smart Space in the portfolio with an investment horizon of next 1 year. The next is the capex play of Inox Wind. Inox Wind is into renewable play, especially into wind energy, engage into the manufacturing and sell of wind turbines. We believe that right now India is having a power shortage. During the time of peak month of May, we had a power demand which is of 250 gigawatt. We believe that this big demand by FY32 likely to get double. And with this, there is a huge capex opportunity in India to increase the power capacities in thermal and other renewable space. And right now, as per the carbon policy, the incremental growth in the renewable is higher as compared to the thermal capacities. So that's why this company will be the beneficiary of the fastest growing wind power demand in India. Currently, as of 31st March 24, The company maintained a solid order book of 2656 megawatt. We believe that going forward, there will be a good number of awarding of project to these companies, and based on the new capex, this is the agenda of government, this company will be the beneficiary of the fastest growing renewable demand in India. With this, the change in the policy of the government and shift towards the renewable power, recently this company converting from high debt to lower and heading towards the lower debt, and the PAT, which were loss making, is likely to convert into a profitability by FY25. By FY27, we believe that this company likely to touch a 1400 crore of profitability. So this fastest growing sector is one of the sector in which one should have a exposure as a capex theme, and which we believe that Inox Wind is one of the company one should have exposure in the portfolio. We set the target of 270 for next 1 year, which provide an appealing upside potential of 31% in next 1 year. The next play is the KPIT technology. This is a mid-cap IT play. We believe that right now we are entering into a rate cut. We already entered into a rate cut cycle, and next year we believe that the IT cycle likely to kickstart once again on a similar tone of 2021. Right now, there is a challenge of continuity of growth in FY20 from FY25 to FY26. So that's why all large cap companies are struggling with the continuation of the large transformation deal wins. But in a mid cap companies, they are pioneer of acquiring small deals and small deals with deal wins into ER&D space, that is engineering, research and development. And this engineering, research and development, the client stickiness is very high, and along with that, the client life cycle is also very high. And that's why KPIT is a solid play of ER&D space in the mid-cap universe, where on a quarter-on-quarter basis, we are continuously gaining market share in terms of ER&D and continuously growing their top line. We believe that this company likely to touch 1,000 crore of profitability by FY26, and we believe that this is a company one should have a exposure in a IT as a theme, and under IT, mid-cap IT are the best place to get an exposure for next 1 year. Next is HG Infra. HG Infra is an infrastructure building EPC company. This is a company which we are considering as a capex cycle. So currently company is owning an order book of more than 15,000 crore, which is almost 3 times of FY24 revenue. So there is a good amount of visibility in the order book for this company for next 2 to 3 years. On top of that, the company is diversifying its order book from road and transport to railway and other solar power equipments or solar power projects. Recently, company acquired or secured a project of amounting more than 1,700 crore in PM Kusum Yojana. This brings confidence on the diversification of the current order book, which brings the volatility, which lowers the cyclicity of the over dependence on one sector. Right now, the company is building diversified book into 3 different segments, and we believe that right now the government focus is on infrastructure building. The government focus is on railway infrastructure building on top of road, port, tunnels. Along with that, there is a solar infrastructure is also in pipeline. That is a part of renewable. So that's why this company is the fastest growing company in the EPC market, and we believe that one should have an exposure to this company, and that provide a good upside potential of 27% in next 1 year with a target price of 1,700 rupees. Next is about AU Small Finance Bank. It's a mid-cap company. catering to the vehicle loan, SME loan, home loan, business banking via private clientele to the low and middle income individual and business people. It is a solid bank which is generating ROA of more than 1.5%. We believe that with a right product mix, this company likely to achieve an ROA of 1.8% by FY27, which we believe that this is a solid return on asset number. This company also showcase and also having a potential gainer in a rate cut cycle, which we are expecting in next 1 year. Company is having 60 to 62% book is of fixed in nature. Whenever the book is fixed in nature, company likely to be gain the benefit of rate cut cycle in the immediate term. So that's why the margin of this company likely to perform better in the medium term with rate cut cycle. This will be one of the best company placed for the rate cut cycle, which likely to be a margin beneficiary. So we anticipate 1 to 2 rate cut in next 1 year. So this company is available at a very reasonable valuation with a ROA profile of more than 1.8%. So we believe that this company provide good upside potential of 25% in next 1 year with a target of 800 rupees. Next is Lupin as a defensive play. Lupin is a mid cap company, a fastest growing mid cap company. Excuse me. Company is continuously growing market share in the recent launch of their 2 drugs and captured the market share of more than 30%. This Lupin is considered as a defensive play. We believe that this is the right play at a current moment where we are seeing good amount of growth trajectory in the US market in terms of US generic. Company is continuously gaining market share. On top of that, company is continuously gaining the improvement in the margins. We believe that this company is able to reach more than 16% ROE by FY26 and with a growth potential of PAT growth of more than 20% in next 2 to 3 years. Currently available at a very reasonable valuation. Given the new product pipeline, we believe that this valuation is likely to sustain in 1 year, and given the nature of defensives as a sector with growth potential, currently company is available at a reasonable valuation. We see 22% upside with a target price of 2600 in next 1 year. Coming down to next company, that is Indian Hotel. Indian Hotel is a company which owns the brand Taj Hotel. We believe that this is the fastest growing market in India. Right now, we are seeing the hospitality industry is seeing an entire upcycle. On top of that, the foreign tourist activities are continuously increasing. Along with that, the corporate activities are also increased on a quarter-on-quarter basis. We believe that second half of FY25 likely to be better as compared to first half, where we see multiple events which are in pipeline. Along with that, the foreign tourist, the number of tourists likely to increase. Along with that, the wedding days are also very, very high as compared to last year. So all in all, this will likely to increase the ARR for the hotel industry. And what we believe that this company is also owning a asset light model, which will bring down the volatility of or cyclicity of the business, which we believe that this company is owning a leadership in the hotel industry. And with this, for next 1 year, this is the best bet in the current market environment where one should have an exposure to the leaders of the hotel industry, where they are having an asset light model. And we are seeing good amount of traction in terms of occupancy, in terms of foreign tourist arrival, in terms of corporate booking, and the number of wedding days. All in all, this is a right playbook for next 1 year, and we see 22% upside with a target price of 800 rupees. And at last, Uno Minda. Uno Minda is a auto ancillary company as a consumption play. is a leadership position in the auto ancillary company. Recently, company is now entering into the EV business of auto ancillary, and what we believe that this EV business likely to add 800 crore to 1000 crore to their top line in next 1 to 2 year. And what we believe that with this increment, the EBITDA margin for this company likely to increase. This company is a solid company, has made a solid track record of servicing to other OEMs in India. Recently, they enter into the partnership of Sunroof. So they build sunroof for all the SUVs, all the major SUVs, and what we believe that with the adoption of SUVs, it is increasing. This company will be the beneficiary of SUVs, the sunroofs. Along with that, they enter into the EV localization that will add the margin growth for margin profile for next 2 to 3 years. We believe that this company likely to touch an ROE of 25% by FY27. Right now available at a reasonable valuation. All stock already corrected from the 52-week high, available at a discount. We believe that this company provides good upside potential of 18% with a target price of 1090 in next 1 year. So these are all our 9 Diwali Muhurat picks for next 1 year based on the themes of capex, export oriented IT theme, defensive play, discretionary consumption play, along with that the rate cut cycle play. We believe that these picks provide a good upside potential of 18% to 38% in next 1 year, and all these are the thematic picks, bottom up stock picking, which is the current market structure, and we believe that this pick could provide you a good investment opportunity for next 1 year. So with this, I'm ending my presentation with our disclosure, and I wish you once again a happy Diwali and happy investing for Samvat 2081. So with this, I'm handing over floor to the moderator. Thank you so much.
Thank you, Neeraj, and thank you for guiding us through the intricacies of the market outlook. I am confident our listeners will benefit from your Samvat picks. You can easily purchase all the stocks with just one click through the Samvat 2081 small case, whose link I have posted in the chat box. You can just follow the link and click on it. Thanks, guys.